Welcome back for another look at the charts. Today we'll have a look at the charts keeping EURUSD and cable in place, yet also replacing prior charts with AUDJPY and Euro CHF. Hence today's pairs are EURUSD, GBPUSD, AUDJPY, Euro CHF, and with no time to waste we move to EURUSD for our chart. Improved economic data from the Eurozone and Europe in general continue to be in focus. Even though the euro could be affected by ECB monetary policy plans and EU's fiscal stimulus plans, skepticism over these actions remains. Currently the pair is returning lower after the upsurge it saw in the beginning of the current week. It is currently trading between our R1 1.1280 resistance level and our S1 1.1180 support level. Our S1 1.1180 was tested twice on the 19th and the 22nd of June, but the currency pair bounced off it, only to move higher. Yet our noted levels lower than the S1 are the S2 1.1125 line and even lower the S3 1.1080 support hurdle. If EURUSD is to move higher and surpass our R1 1.1280 resistance level, then the road is set for the R2 1.1340 level to be re-engaged, as it was last seen on the 23rd of June, but was not breached. However, if the pair is to jump even higher, we have also noted the R3 1.1390 hurdle that was tested various times from the 10th to the 11th of June, but not breached. The RSI indicator below our chart has moved below the 50 level, indicating the selling momentum is still present for the time being. Moving now to cables for our chart. The pound has been driven by possible updates on the Brexit front that have been stalling for the past weeks, while the latest fundamentals regarding a possible new trade deal between the US and the UK may move the pound further. Yet in our view, Brexit headlines could prove more volatile for the currency pair for now. In the most recent 4 hour sessions, the currency pair constantly tested our S1 1.2405 support level, but was not able to breach it. This level has only been breached once in June on the 19th, when the pair fell to our S2 1.2350 line, only to bounce back off it and return to the S1 1.2405 and then surge higher. Lower than the S1 and the S2, we have also noted the S3 1.2290 line as a possible stop point if the selling momentum is constant. In the other direction, an upward momentum could send the pair higher for the R1 1.2530 line that was last tested on the 24th of June but not breached. Other levels even higher are the R2 1.2585 line and the R3 1.2665 hurdle, both last seen on the 16th of June. The RSI indicator below our chart has been moving between the 70 and 30 level for the past week, possibly indicating some uncertainty over the currency pair's direction. Moving now to AUDJPYs for our chart. According to Australian financial data, Australian businesses showed activity was improving since the lockdowns of April and May, which could support the currency further. On the other hand, the JPY, as a safe haven asset, could appreciate further as investors shift their appetite for risk. Our pre-mentioned comment is displayed in the currency pair's recent activity. For most of June's trading course, the pair has moved in sideways motion that tends to become narrower. In the past week, the pair has been moving in a sideways motion between the R1 7435 resistance level and the S1 7330 support level. To the upside, above the R1, we have also noted the R2 75.05 level last seen on the 16th of June, and even higher the R3 75.60 line last seen on the 10th of June. Yet, if a selling momentum is to dominate the AUDJPY's trend, then it could move below the S1 73.30 support level and head for the S2 72.65 line that was tested on the 11th, 12th, the 15th and the 22nd of June but was not breached. Even lower, we have also noted the S3 71.95 as a possibility if a strong selling momentum is continuous. Moving now to Euro CHFs for our chart. The latest news we have from Switzerland is that the SNB is not willing to pay for the damage the country has suffered from the COVID-19 outbreak. They believe the government should step in with fiscal stimulus and support the economy. Since the 17th of June, the currency pair has been moving in a sideways motion between the R1 1.0715 resistance level and the S1 1.0635 support level. Both levels have been approached but not breached. Yet if the pair comes under buying interest, we could see it surpassing the R1 10715 line and aim for the R2 10760 line that was last tested on the 16th of June. Even higher, we have the R3 1.0790 level as a possibility if a strong bullish momentum arises. On the contrary, a selling interest could send the currency pair below the S1 10635 level, with the S2 1.0590 possibly becoming a target. Our lowest level noted, however, is the S3 1.0525 line. Please note the RSI indicator below our chart is seemingly aiming for the third level, which implies some bearish sentiment could be present. We hope that you found something useful in this report, and from all of us here at IronFX, best wishes for solid trading.